Hi friends, welcome to our channel. Top Nifty Midcap loser. Tata stock crashes over 8% on poor QOQ profit show. Shares of the leading design and technology services provider Tata Elxsi plugged over 8% on Monday and were last seen trading 8.1% lower at rupees 7,783.4 a piece after reporting its earnings results for the September ending quarter over the weekend. The IT stock was the worst performer or top loser on the Nifty Midcap 100 index. The Tata Group company's profit figures declined on a sequential basis in the second quarter of FY23 despite reporting a good set of earnings results on a yearly basis. Tata Elxsi's net profit declined 5.65% to rupees 174.28 crore in the July-September quarter versus the preceding quarter and jumped 39.1% compared to the year-ago period. Its PBT slipped 4% sequentially and surged 28.2% YoY to rupees 219.17 crore and EBITDA declined 5% QoQ and advanced 23.4% YoY to rupees 226.5 crore. The company's EBITDA margin fell from 32.8% in Q1 and 30.8% in Q2 FY22 to 29.7% in Q2 FY23. However, the revenue from operations rose 5.1% QoQ and 28.2% YoY to 763.2 crore in the quarter under focus. Tata Elxsi stated that its growth in the period was primarily volume led and all three of its segments showed robust growth sequentially. Embedded product design by 3.8%, industrial design and visualization by 13.5% and SIS by 26.2%. Next, dollar slips sterling gain as UK brings forward fiscal plans. The US dollar weakened in early European trading Monday while sterling gained on the news that the UK will bring forward its tax and spending plans in a bid to reassure markets after the turmoil associated with the start of new Prime Minister Liz Truss premiership. The dollar index, which tracks the greenback against a basket of 6 other currencies, fell 0.3% to 112.828, having climbed almost 18% this year, heading for a record annual gain since data started being collected in 1972. Dollar bulls appear to be pausing for breath after last week's red-hot US inflation print reinforced bets of another aggressive rate hike at the next FOMC meeting in early November. The core narrative remains that the Fed will want higher real rates for longer to fight the biggest inflation threat since the early 1980s, and the dollar should continue to find good support on dips, said analysts at ING in a note. Elsewhere, GBP or USD climbed 0.9% to 1.1265 after the UK Treasury announced early Monday that Chancellor of the Exchequer Jeremy Hunt is to announce new tax and spending plans later in the session, 2 weeks earlier than foreseen in an effort to calm markets which had been roiled by his predecessor's economic program. Hunt will make a statement later this morning, just 3 days after taking on the role, on measures to support fiscal sustainability, his office said in a statement. He will then speak to the House of Commons in the afternoon. The UK bond market and sterling was hit hard by the original plans of new Prime Minister Liz Truss to fund massive tax cuts, with borrowing resulting in the Bank of England stepping in to restore calm, announcing an emergency bond buying program which ended on Friday. Euro USD rose 0.3% to 0.9746 ahead of the release of the latest Italian consumer price data, which is expected to rise 8.9% on the year in September, showing the inflation remains elevated in the Eurozone's third latest economy. European Central Bank Governing Council member Martins Kazakhs backed a hike of 75 basis points this month and another 50 or 75 bps for the final meeting of 2022 in December, depending on data and the outlook for prices. Given the current trend, I don't see any need to pause after that, Kazak said in an interview in Washington over the weekend. The pace could slow down somewhat, and I would say that we start to use a wider set of instruments to work across the whole yield curve. USD JPY edged 0.1% lower to 148.65, not far off its 32-year low of 148.86 hit on Friday, with traders wary about further intervention as various Japanese authorities kept up their warnings to the market on Monday. Japan last month intervened to buy the yen for the first time since 1998 after the Bank of Japan maintained ultra low interest rates. AUD USD rose 0.8% to 0.6248, NZD USD climbed 0.6% to 0.5594, while USD CNY rose 0.1% to 7.1992 after Chinese President Xi Jinping said the country has no plans to scale back its zero COVID policy, a stance which is at the heart of China's recent economic slowdown.